Hi, this is Amir with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 7th of March. Starting off with the FTSE 100, which seems to be in hangover mode after the excitement or lack of it from the spring budget. We're still dithering near the top of that triangle there, the red triangle from February, around 76.70. Want to see basically an end-of-day close through 7700, yesterday's peak, to then give us the chance of hitting 78.40 by the end of this month. On the downside, below the 50-day line and below the triangle floor, we could probe down to the 200-day line, 75.40, but it has to be admitted we are mid-range and very flat indeed in the RSI, just in the low 50s again, not really giving us a hint either way, apart from us being allegedly in a rising trend channel there from back in the summer. Moving on to the DAX, where things are never that dull, and here you can see that we are still trying to consolidate at the higher levels. We've factored in the possibility of a test of 17,400, which was the mid-February resistance. We want to see an end-of-day close through that red line there from September, 17,800, to give us the chance of hitting as high as 18,400 or 500 by the end of next month. We're giving it that long. If we do break down below 17,400, we've got the floor of that rising trend channel from October at 17,200 to hopefully support this market. That would also fill the second gap down that we had in February, gap up rather, the floor of that gap that we had in February, and then we can move on. Moving on to the Dow, and here it was all about the floor of that October trend channel being broken. We've sort of consolidated a little bit, but above the 50-day line there at 38,200. While we're above that, we've still got the chance of a breakout through 39,200 and then heading up to the very high levels, record levels, 41,000 by the end of next month if we get a decent resolution above 38,000 for the Dow. Market at the moment, by quite some margin, is obviously Bitcoin, and we had our record highs, the record level through towards the 70,000 level. And current consolidation looking reasonable between 65,000, say, and 69,000. Got to factor in the fact that we might have to test the initial resistance here for this market at the end of February, around 64 or 63,000. But at least while we're above 65, looking for an imminent break of 70,000 and 70,100. The May resistance line there from last year, and that's our near-term target. Moving on to gold, which has sort of joined in the fun that Bitcoin was having over recent weeks. Here we're very close to our rising trend channel top target from last month. At 2180, is now in fact up to 2185, so that's the level to shoot for later this month. In terms of support, I think we can probably say that the 2130 area, the initial resistance of March, should hopefully come in as support for this market. But the 50-day line still rising, which is healthy, and really the anywhere near 2200 would be quite a result, given that we are in record territory for gold at the moment. Moving on to the stocks, and we're looking at Andrada first. Here you can see that we are sheepishly breaking out of that falling trend channel, which has been in place since June, and we've also broken above the 50-day moving average at 4.4 pence. Above that, looking for the top of that rising trend channel from back in December at 5.5 pence, ideally by the end of this month. The other point to note is that we bounced off RSI 50, and that tends to be a decent leading indicator on recovery. Moving on to Cadence, where just for a change, the market's received its RNS very well indeed. Here you can see that we are heading up towards that main resistance line there at 6 pence after gapping up. So it's a bear trap gap reversal that tends to be relatively reliable. So hopefully we'll get up to 6p or even 7 pence by the end of this month. And looking for the shares to remain above the top of that gap, 4.82 pence in the meantime. On to chill, and here a recovery of sorts for the stock. You can see that we've broken a line of resistance there from back in December around the 1.95 level. Probably to be sure that we're going up, you want to see this market break, or the stock break that red January resistance line at 2.35. That would then open up the possibility of filling the gap up to 4 pence, maybe by the end of this month. But it is early days yet, and one's keeping a a close eye on that situation. Onto a bigger stock that we normally look at, because there's not that many small caps moving today. Darktrace gapping through resistance very resiliently. The old peak there around £3.81. Above that, we're looking at the top of the rising trend channel from back in May last year, as high as £4.70, and we can see that maybe as soon as the end of this month. Smaller stock again is Emypyrean, and here it's coming up against the 200-day moving average. Two or three attempts to get through that at 0.73. Above that, we're looking for 1.1 pence, perhaps by the end of next month. Ideally, we stay on the right side of the latest support around 0.6, and that's also very close to the gap that we had through 0.58 rather last month. 50-day line is rising now, so that does suggest we're in a positive consolidation, and that 0.73 will eventually break to give us 1.1 pence. Onto Funding Circle, where its RNS today was well received with a bear trap gap reversal. It was actually surprising that the shares actually made a new low, a new leg down below 30 pence from January. So maybe we're going back to where we should have been all along. The old low there from October at 32 pence, that's also the low of the day and the 50-day moving average. The longer we can stay above that region, the more chance we have of hitting our old target here for the shares at 50 pence, ideally by the end of this month or even sooner. The big block on the price action, though, is the 200-day line, currently around 41.5 pence, and we need to get above that on an end-of-day close basis. Next up is GSTechnologies, and here you can see that we've also broken a resistance line, broken it out of a triangle as well, around 1.25 pence. Above that, looking for the top of the range, basically as high as 2 pence, perhaps as soon as the end of next month or even sooner than that. Moving along to Hummingbird, which is feeding the benefit of gold being up at the highs. Here we've had the first go at breaking the 200-day moving average at 11 pence. We're still looking for 14 pence, perhaps as soon as the end of this month, especially while we remain above the 10 pence zone, which was resistance on the way down. Moving along to ITV, and here stock's been horrible over the years. As you can see, it's been sort of a bit like Vodafone, that bad. Here we've had a gap higher at the end of February, and we've had another gap now, so that suggests that maybe there's something positive going on here, catching the bears out. So basically, effectively a double bear trap gap reversal. Initial resistance here at 67 pence. If we can break that, then we are looking for the resistance line that I'm about to draw now, which would be up towards 75 pence, and obviously that is the recent resistance, summer resistance for the shares. Upside value by well, there's no end of day close back below the floor of the latest gap at 62 pence. Moving along to Reach, and here you can see that a chart not that dissimilar to the one of ITV, but we had a bear trap gap reversal, which we appreciate, and it looks like the shares are going into a bull flag at the old neckline resistance there at 67 pence, or 66 pence in fact. Above that, we're looking for 77 pence by the end of this month or even sooner. On to strategic minerals, which has done us proud over the last couple of months, and hopefully in the wake of today's RNS should continue to do so. It looks like we're in a mid-move consolidation here around the 0.25 pence level, and we're looking for 0.35 by the end of next month or even sooner on the situation, backed by bear trap gap reversal and then the golden cross that we had in the middle of last month between the 50 and 200-day moving averages. Sovereign metals continues to be a bit of a head scratcher at the lower end of its range and within a falling trend channel, mildly falling trend channel. Want to see the shares break the 24 pence level on an end of day close basis, which they might do today. Then that would take us hopefully up to the top of the range by the end of this month at around 30 pence. Finishing off with TM1, which every time you think it's over, it bounces back, which is interesting. Here we've been in this falling wedge formation, top of that wedge at 1.2 pence. We can get an end of day close above that, looking for 1.6 or 1.7 pence by the end of this month. Ideally, we stay on the right side of the 50-day moving average. That's at 0.93. That's it for me today. More updates tomorrow.